Welcome back to Growth TV. I'm Katie Maloney, and I'm joined today by Steve Castino, Chief Growth Officer for Rehmann and ACG's incoming board chairman. Steve joins me to talk about what ACG members can expect in the year ahead. Steve, welcome to Growth TV.
Thanks, Katie, for having me. Excited to be here.
So as you start your tenure as board chair, what are some of the programs and initiatives that you're the most excited about?
Well, ACG is all about networking, right? That's at our core. ACG has always been about networking. So we're here at DealMax today. This is obviously our marquee event, so we want to continue to build upon DealMax. But in addition to DealMax, we also want to build up the capital connections. We want to build up all the local chapters all the events that we're having, and just make each event better and better. Another area that we want to focus on is One ACG. One ACG, there's so many positives to One ACG. I go back to when I was the president of the Orlando chapter, 10 plus years ago. We started this event called the SMART Awards, and it was basically recognizing the best companies in all of Central Florida and for different growth goals and that sort of thing. Well, we started it from scratch. What we should have done is reached out to other ACG chapters, or actually reached out to HQ, and they could have told us, hey, this is what some of the other chapters are doing. It would have saved us hundreds of hours in time in kind of recreating the wheel. So One ACG is a huge opportunity going forward, and I think we're gonna really build on that. We're gonna the chapters that are already part of One ACG, we're gonna make them better, and the ones that aren't, we're gonna continue to make them better and invest in all of the chapters. I don't know how many we have, but quite a few of them. Including Canada, and I just came from a meeting in Canada, and we're really bullish about what's going on with ACG in Canada right now, and we just walked out of this meeting, and we just have tons of ideas of how we can double the size of Canada ACG here in the next year.
Oh wow, that's really exciting. It's been a turbulent couple years for M&A, and I think at this conference and elsewhere we're hearing little signs of optimism that things might be turning a corner, but I wondered if you can talk about the role that ACG plays in a market environment like the one we're in today.
So let me talk about the market real quick first, and then I'll jump into ACG and the role. So I would tell you 2023 for us, so we're a professional service firm. We do a lot of M&A work, both buy side and sell side. And I will tell you that 2023 was a slower year, right? That's not, GF data will tell you that. It was a slower year for a lot of us. 2024 is starting off to be a busier year. It's probably not to the point 2022 was yet, at least for us, but it is definitely busier than 2023. The role ACG plays in that, in both a busy year and a slow year, is tremendous. I would tell you ACG probably is even more valuable to a firm like ours, or an investment banking or a private equity or whoever it might be in the slower years, because then you truly have the time and you're investing in the foundation and you're trying to get out there and establish the relationships that you need to have to source deals. So ACG plays an amazing role in that. The other thing is GF data has been such a nice addition to ACG. They fit so nicely hand in hand for one another. I would really encourage our members that aren't GF data subscribers to subscribe. Our company, we started subscribing about a year ago, and for our valuation team, for our due diligence team, it has been so valuable because it's that lower middle market deals, and it gives you more data, more detail than a lot of the other platforms out there. So ACG plays a huge role in both the boom and the slow times in the M&A market. But I do think that whether the economy is good or bad going forward, I see that M&A will be busy. There's no question about it. A lot of these funds that you're talking to out there today, they have capital raised, and they have to spend the dollars. And so they're all looking for opportunities, and they're getting better and better at the opportunities. That's the other thing I would say. The funds that I've talked to yesterday and today, they're also specialized right now in terms of industry and what they're looking at. 10 years ago, you'd come to DealMax, then Intergrowth, and everyone's saying, "Oh, what was your specialty?" I'm looking at a $3 million EBITDA company to a $10 million EBITDA company. Today, I'm looking for $3 million EBITDA company to $5 million EBITDA company in specific the plastics industry, or whatever it is. So we as an industry of M&A are getting way more specific, and And we as ACG need to continue to evolve with that as well in terms of the education that we're providing. We need to listen to our members to give back in terms of the education.
Mm-hmm. And you touched on this a little bit, but ACG serves so many different constituencies, one of which are M&A partners, the accountants, the attorneys, and other advisors. So I was hoping, coming from a professional services perspective, if you could talk about the role that ACG's played in your own career.
Yeah, ACG's played a huge role in my career. I've been a member, I think, for 20 years of ACG. I've been coming to DealMax for 15 years. So it's interesting. It's kind of evolved. So we had our own CPA firm, and in 2022, we merged it with Rehmann. Rehmann was a much bigger professional service firm. So historically, I had always come to ACG to meet investment banks and private equity. We had a focus on serving the middle market. We did about a third of our clients were private equity owned. So I would come here and I would want to meet with those folks. I still come here to want to meet with those folks. But now it's interesting. My personal role, I'm the Chief Growth Officer of Rehmann now, and I'm in charge of growth for our firm, both acquisitive and organic growth. So if you think about that, we are at our core a CPA firm, and we have other verticals as well. But what we like to do in terms of a new market, we like to find a CPA firm to build on first and then add some of those other verticals out there. So what I'm doing today and yesterday is I'm also trying to meet those other professional service firms or CPA firms that we could combine or we could acquire in Rehmann. So it's kind of gone full circle, and it's been kind of fun to do that. But I mean, at the core, what we're trying to look for, investment banks, we're trying to meet investment banks and private equity groups because they're the ones that source us, for all the quality of earnings, tax due diligence work, technology due diligence work, and so forth. But now, since 2022, with my role changing, I'm very proactive in meeting other CPA firms as well, which has been fun.
Great. Well, Steve, thank you so much for joining me on GrowthTV.
Thanks, Katie. Thanks for having me. Appreciate it.